How can startups use digital-only AI, artificial intelligence first models to conserve cash and grow in the tough early years? Juliet Anammah, founder of CG&R Strategy LLC, a specialty consulting company advising consumer goods and retail companies on distribution, digital operating models, and decarbonization, shares thoughts on this. She's also a former CEO, chair, and chief sustainability officer at Jumia Group. We also have Lekan Sote, MD Publica, with some insights on issues related to education in Africa. Hello and welcome to another episode of Global Business Insights, where we bring big new ideas from seasoned experts and analysts, diving deeper into the headlines. First, some of the main stories. In November, US jobs added was more than expected at 227,000 compared to an upwardly revised 36,000 in October, when hurricanes and the Boeing strike affected the data. The unemployment rate inched higher to 4.2%, slightly higher than 4.1% the previous month. Average hourly earnings held steady at 4%, coming in above the market forecast of 3.9%. The report is somewhat benign, as the Federal Reserve's FOMC December meeting focuses on the inflation outlook. Markets expect a December cut, but a more hawkish slant after Trump's victory. The Eurozone economy expanded 0.4% on quarter in the 3 months to September 2024, after a 0.2% rise in Q2. The Q3 expansion was also in line with previous estimates. Germany industrial output dropped by 1% month-on-month compared to the expected 1.2% rebound, and a revised 2.0% decline in September. Year-on-year, industrial production is down by 4.5% in October versus September's 4.3% drop. That was a revised read. UK house prices rose by 1.3% in November, according to Halifax data, better than expected. At the end of a 3-day meeting of the Monetary Policy Committee, the Reserve Bank of India announced the decision to keep the policy rate unchanged at 6.5%. The bank also revised its growth forecast for the 2024 to 2025 financial year downwards to 6.6% from 7.2%. The rally in Wall Street yesterday took a pause as investors turned their attention to today's government jobs report and its potential implications for the Federal Reserve's policy meeting later this month. All the major indexes closed the day in negative territory, with the small cap Russell 2000 down 1.25%. Donald Trump appointed venture capitalist David Sachs as the White House's AI and crypto czar, even as crypto euphoria fueled by the election takes Bitcoin briefly over $100,000. Japanese Foreign Minister Takeshi Iwaya said it will pick up trade talks with Trump on elimination of tariffs on cars and auto parts. Oil prices were lower in early Asian trading after the OPEC Plus virtual meeting decided to postpone planned supply increases and extended deep output cuts to the end of 2026. The focus continues to be on weak demand, countered by a potential for geopolitical surprises even as we speak. If you look at the Brent crude standard, it's down 0.94% at $71.4 per barrel. Startups face many challenges, including finding the right skills and coping with limited capital, and this is the focus of our deep dives on this special episode. First, Juliet Anammah, founder of CG&R Strategy LLC, former CEO at Jumia, speaks to how an initial digital-only AI model can be helpful to reduce cash burn.
Startups struggle with cash burn, particularly before they reach two significant milestones. One is profitability. The second is any other critical milestone that investors are looking for before they extend more funding to the startup. So cash burn is a very important topic for startups. Most startup CEOs will tell you that the first couple of years are literally trying not to die, let alone survive. There are three things that normally burn cash very quickly, and I call those the three horsemen. One is hiring talent. Second one is leasing physical office space, and the third one is, of course, investment in capital goods or capital assets. These three can burn cash very rapidly. Okay. So there is a model which I typically recommend for startups in the early years to conserve their cash, and I call it a digital-only AI-first model. Basically, it means digital-only is very straightforward. It means that the startup is operating exclusively online, no physical space. AI first is more nuanced. AI first doesn't mean you only operate with AI tools and there are no human beings running your business. No, it means that once you have defined your process architecture and determined and also broken them down into specific tasks, it pays to first of all see what kinds of AI applications are available that you can leverage in running some of those tasks. To the extent that those AI tools can run those tasks reliably and more cost effectively, it's worth considering using those tools to run them. And there are several examples. AI tools have been used in so many different ways, but some of the examples of areas are, of course, in customer service. Virtual assistants can run, respond to repetitive customer inquiries, can be used for 24/7 support. But there's a caveat. Every single human being does not like the experience of when you call a customer service center with a request or a problem and you're being taken on a run around by a virtual assistant who doesn't quite understand the nuances of the specific problem that a customer is experiencing. So it's very important to complement AI with human interactions. People still need to talk to someone in customer service. Other areas where AI has been deployed quite effectively are such areas as in marketing. So analyzing customer data and coming up with more personalized marketing campaigns for customers that can drive better engagement and conversion rates. Very, very critical, very good. Recommendation engines, they've been run for decades with artificial intelligence tools. In, let's say in finance, okay, so automating forecasting, financial reporting, expense tracking, those kinds of things can be done with AI tools that are currently available and can then release time for finance team to focus on more strategic areas. Process automation also, so invoicing, scheduling, all those kinds of tasks that were handled for decades by business process outsourcing. They're just natural extensions for AI to be able to do those tasks effectively. Even when you look at one other area could be in product development. Yeah. So in product development, coming up with designs, particularly I see that very well in fashion. Runway.ml is a very good application that I've seen in fashion that can come up with initial designs, and then your design team can then fine tune it based on their customer requirements and so on. So there are multiple areas. And the good thing is you have the option of looking at both open source or proprietary applications, subscription models that make it easier and cheaper for a startup to leverage those kinds of applications to work. What are the benefits? Very simple. One is extending the runway for the startup until, extending the runway of your seed funding is one. Two, it also allows the startup to scale fast or to fail fast and fail cheaply. Thirdly is being able to leapfrog in a competitive arena where you have other incumbents. If you don't have to tie up a lot of your cash in capital assets or leasing office space, then it really helps you in terms of cash burn. Having said that, how long a startup can utilize this very simple model that you can use in the initial years depends on many things. One of them is the type of business area, the growth rate of the startup, the need for your customers to have a real life immersive experience of your brand, the need for human interaction as early as possible in the journey of the brand and the business, and of course how much cash you have. Ultimately, at some point, you're going to have to hire people. So this is just going to help you kind of provide a ramp for the business to grow. Ultimately, you have to hire people. At some point, you will need that office space.
A recent study scored Nigeria low in education of its people, ranking not in the top 10 for African countries. This was according to Data Panda, which measures education levels, literacy rates, and years of schooling. Lekan Sote, a senior business analyst and MD Publica, speaks on these issues.
Because of Nigeria's high population, it will not be a surprise that Nigerians are nominally more educated than even the entire population of some African countries that appear on the top 10 rank of most educated countries in Africa. Yet, it is regrettable that Nigeria is not in the top 10 of the most educated nations in Africa, even though Seychelles, that is leading the African pack, is not even in the global 10 rank. It is way back in the 70th position in the entire world. Some experts say that there is a connection between a high education index and the economic development of a country. Education psychologists too argue that the higher the educational attainment of an individual, the higher its ability to earn more money. Economists and sociologists have argued that illiteracy, poverty, and disease are handmaidens. There's no doubt that education is important to the economic development of a country. A highly educated populace will have the required skills, attitude, and aptitudes to move the economy of their country forward faster. If Nigeria is serious about remaining the biggest economy in Africa, the political leaders must pay more than passing interest in the education of its people. They must come up with educational policies that will place Nigeria in the top 10 rank, not just in Africa, but globally. To achieve this, government must promote a nexus between good education, merit, and rewards in every aspect of life in Nigeria. The current practice where individuals with the least qualifications use their connections to get jobs with the highest prestige and remunerations must stop. Government must invest in schools, teachers, books, laboratories, and other educational tools throughout the country. But specifically, government must adopt an educational Marshall Plan for the North that has a higher rate of out-of-school children in Nigeria. To help themselves, Southern Nigerians must agree to help Northern Nigeria to escape the illiteracy trap. If not, the Sisyphus syndrome, whereby Nigeria will take one step forward and two steps backwards, will continue without an end.
Asia Pacific stocks are mixed on South Korea risk and as Wall Street retreated from record highs. Well, that's all we have on this episode of Global Business Insights. This is Bodia Shosami. Thanks for sharing. Enjoy the weekend.